Let's talk about that shoebox or that drawer crammed with crumpled receipts. You know the one. Today, we're going to turn that chaos into a financial fortress. We're building a system to put you in complete control of your taxes and finally give you some peace of mind. So let me ask you something. For anybody running their own business or working as a freelancer, what's that one piece of mail that can make your heart just plummet? The one thing that can turn a perfectly good week into a frantic nightmare of digging through old files. I think we all know what it is. Yup, that's the one. The dreaded IRS audit notice. It's basically the final exam for your financial organization, and for way too many people, it's a test they are totally unprepared for. But look, the fear isn't just about the hassle. It's about the very real, very painful financial consequences. And that really gets to the heart of the problem, right? The high cost of clutter. See, being disorganized with your tax stuff isn't just messy. It's a direct financial risk. It can literally cost you thousands of dollars. Let's break down exactly how that happens. It usually starts with this one seemingly innocent mistake: commingling funds. You use the same debit card to buy new software for your business and then a coffee on the way home. To the IRS, that is a massive, waving red flag. Why? Because now it's nearly impossible for you or for them to prove what was a legitimate business expense. So let's see how this plays out. Imagine you claim, say, $5,000 in vehicle expenses for the year. But when the IRS asks for your proof, all you have are a few random gas receipts and absolutely no mileage log. Without that clear record separating business trips from personal errands, poof, the entire deduction can be disallowed. Just gone. And the financial hit from that is huge. That disallowed $5,000 deduction means your taxable income just shot up. So maybe that means you suddenly owe an extra $1,500 in tax. But wait, it doesn't stop there. The IRS then tacks on a penalty. All of a sudden, your record-keeping slip-up is an $1,800 check you have to write. And here's the number you have to remember: 20%. That is the standard accuracy-related penalty. See, in the eyes of the IRS, a lack of records isn't just an oopsie, it's negligence. And that 20% penalty gets slapped right on top of the extra tax you already owe. It's brutal. And believe it or not, it gets worse. That 20% is just the beginning of the avalanche. If your disorganization made you file late, there's a penalty for that. Pay late, that's another penalty. And then here's the kicker. They charge you interest every single day on everything: the unpaid tax and all the penalties. It's a financial snowball that can get out of control fast. Okay, but enough doom and gloom. This is where we flip the script. This quote right here, it nails the mindset shift we all need to make. This is not about being a victim of the tax code. This is about taking control. A system isn't just about avoiding a nightmare, it's about empowerment. So let's build that system. Let's create a new reality. We're going to move from that world of chaos and fear to a place of absolute control and confidence. And trust me, that is the real payoff for getting organized. And just look at what this gets you. We're talking about getting every single legal deduction you are entitled to. We're talking about being audit ready at a moment's notice. How good would that feel? You'll probably lower your CPA fees because you aren't handing them a disaster to sort through. No more stressful filing extensions. And maybe the best part, you can finally make smart, confident financial decisions all year long. So let's reframe this whole thing. This is not a chore. This is not about being neat just for the sake of it. This is a strategic advantage for your business. It's about control over your money, it's about speed, and it is absolutely about the incredible peace of mind you get from knowing your finances are on solid ground. So, how do we get there? I promise you, it is not as hard as you think. We can boil this all down to a simple 3-step action plan that you can literally start today. Here it is. 3 simple but powerful habits. Number 1, go digital. Number 2, separate your accounts. And number 3, set a monthly tax sync. Let's quickly break down each one. Step 1, go digital. Seriously, this is a game changer. The second a paper receipt enters your life, scan it. Your phone is a high-powered scanner. Use an app, snap a photo. I don't care how you do it, just get it digitized. No more fading ink, no more lost papers. Everything becomes instantly searchable, securely backed up, and way more efficient. Step 2, separate your accounts. This one is completely non-negotiable. You need a dedicated bank account and a dedicated credit card just for your business, period. This single action completely eliminates that commingling red flag we talked about and makes defending your deductions incredibly simple. And finally, Step 3, the habit that makes it all stick, the monthly tax sync. Open your calendar right now and set a recurring appointment with yourself, 1 hour, once a month, that's it. Use that time to catch up, scan any receipts you missed, and categorize your digital records. This one simple habit makes that panicked year-end scramble completely disappear. So I will leave you with this final thought. Your tax records, they are not just a pile of paper. They're a financial asset. They are the proof that defends your deductions and protects your hard-earned money. So the only question left is, are you protecting them?